Hey traders, welcome back. In this short video, I'm going to share the key steps to pass your prop firm evaluation so that you can convert that demo account into a live funded account. Let's dive right in. First things first, know your program rules like the back of your hand. For example, if your track requires a 6% profit in 45 days, a 1% daily loss cap, and a maximum 3% drawdown, you must adhere to those limits on every single trade. You also have a consistency rule. During the evaluation, no single trade can exceed 30% of your target. So this is the max, right? And 50% for the flex tracks. If you're a 6% goal on 50K, that's 3,000. And then in the max, each trade can't win more than 900 for, let's say, the 5K account, right? Well, that presents, of course, over leveraging. Next, you want to pick your account size, and you want to pick the one that suits your capital and confidence. If you're starting at 5K or 10K demo, this helps you build the consistency without the overwhelming risk, of course. But once you're comfortable hitting the smaller targets under the live conditions, you can scale up. Remember that smaller accounts let you nail the rules with lower dollar swings. You need a clear, repeatable strategy. Are you a scalper hunting 5-minute breakouts, or a momentum trader riding big earning moves? Or maybe a systematic swing trader entering on pullbacks? Whatever your style is, write it down. Write down your entry criteria, your risk per trade, and the profit targets. Then, of course, backtest on your demo to ensure that it does work. Risk management is mission critical. Never risking more than 1% on your account on a single position can definitely help you. That means if you're on a 25,000 demo, a 1% stop loss is $250. If you can't find a setup where your stop is within that distance, move on. Also aiming for maybe a minimum 1 to 2 risk to reward. If you risk 250, target is 500. Over time, that edge compounds in your favor. Because of the consistency rule, you'll need to keep each trade under the allowed percentage of the target. Tracks your win rate, average risk reward, and max drawdown daily. If your win rate dips below the required amount, reevaluate your strategy. A trading journal helps you spot reoccurring mistakes. Maybe you're exiting winners too early, or maybe you're letting your losers run past their stops. All these types of things can definitely be affecting you. Passing an evaluation isn't just about formulas. It's about discipline also. Resisting the urge to revenge trade after a bad day, or if you hit your daily loss limit, stop trading for that day. If you're on a losing streak, step away, review your journal, and return with a clear head. Emotions can break your consistency faster than any market move. If after a week you're far from the profit target, don't panic. Adjust. Maybe your trading size is too big relative to your stop, or perhaps your filter for setups is too loose. Tweak your rules, stay within the risk limits, and keep testing. Remember, every evaluation reset, if you bust the account, is a learning opportunity. Just refine and try again. To recap, memorize all the program rules: profitability, daily loss, drawdown, and consistency. Pick the right account size for your skill level. Develop a clear and back-tested strategy. Manage your risk. Maybe it's 0.5 or 1% per trade with a sound stop loss. Track your metrics. This is very important. And of course, journal every single trade. Keep your psychology in check. And of course, stay disciplined. This is harder than it seems, but it's a repeated action that you got to do. If you do these 6 steps, you'll dramatically increase your odds for passing the evaluation. In our next short video, I'll cover when you're truly ready to trade for a prop firm. So if you know exactly how to gauge your readiness before you even start this challenge, hit the like if this helped, and subscribe if you want to see the next video.